Welcome to the Capital Spreads Weekly Update. Today's Thursday, 20th of May 2010. And the theme so far, political news continues to influence the financial markets very strongly. For example, you've got hanging questions about whether the UK coalition government can work and start reining in the UK deficit. At the same time, concerns about a number of the Eurozone countries still linger in many people's minds as to whether they can start turning around their deficits. And only just yesterday you've had unilateral comments come out of Germany which have said that they want to restrict short selling on a number of selected instruments in their country. The worry now is whether other Eurozone countries will follow their example. At the same time, the currency markets continue to be the biggest players in the markets. Sterling and euro at the moment continue to weaken, and the US dollar as a result of that is starting to strengthen. So the situation so far, euro dollar is trading around 123.40. It hit a low of 121.50 yesterday after comments out of Germany which restricted short selling a number of selected instruments in Germany. In some respects, this could almost be seen as a panic sign by the German government, and the question now is whether a number of other Eurozone countries will follow their example. At the moment, no other country has shown similar interests or views. However, the questions still remain. It hit a low, as I mentioned, of 121.40 yesterday, but rallied later in the afternoon after some comments out of the ECB which suggested that they will possibly support their currency if it showed extreme weakness. However, many people are still currently targeting around 116.00 for euro dollar, and possibly even as low as parity with the US dollar. In the short term, however, you're looking at support around 120.00 on the downside, and resistance around 125.20 on the upside. Sterling dollar also continues to weaken. It's currently trading around 142.90. Many people are now looking at a view of sterling dollar hitting low about 140.00. Now, this is principally of the fact that we have a UK coalition government that has come into power, and many people are still unsure whether the UK can actually start reining in its deficit, considering you've got the Liberal Democrats and the Conservatives, two parties that have in the past been on opposite sides of the political spectrum. At the moment, you're looking at, as I mentioned, sterling trading 142.90. On the upside, if it does bounce from here, you're looking at resistance up around 147.80, and nothing really in between that level and where it is at the moment. The FTSE and many of the equity index markets around the world have also come up very aggressively off the back of this this strong uncertainty we've had. The FTSE is currently trading around 50.75. It's down about 100 points in the day. Many people are actually currently eyeing around 5,000 as a support level for the FTSE before it starts to show any sort of support and maybe bounce from there. On the upside, you're possibly looking at resistance around 51.50, then possibly up around 5300. However, at the moment, there seems to be almost a mood of panic and uncertainty as to what the markets will be doing, and they're very, very volatile as it currently stands. The commodity markets, gold and oil, continues to show some divergence in the way they move. However, that divergence is actually starting to narrow. Oil, for example, has come off about $17 from its high. It hit a high of about $87 just near the beginning of this month. It's currently trading around $69.80. We're possibly looking at support around $70 for oil, and if it does find support around $70, you're possibly looking at it to bracket between $70 and $75. Gold at the moment is trading around $11.85, having come off a high recently of about $12.50. Now, many people were using gold recently as a safe haven from all the uncertainty that we have had. However, given the fact that so many people have been buying that, and some people have now started to view that even gold as being overvalued, is possibly one of the reasons why it's actually come off. You're possibly looking at gold ranging between about $11.75 and $12.15 in the short term. However, the long term in gold hasn't actually been broken, so you could possibly see it going higher from here. Even possibly as high as about $1,400 is what some people have been mentioning. In terms of the week going forward, we don't have much strong data for the coming few days or so. The only two possible things to keep an eye out for will be the German IFO, which comes out tomorrow, as well as the UK GDP coming out on Tuesday next week. However, both of those aren't expected to show any substantial moves, although a slight improvement in both is actually expected. In terms of client positions, many of clients have been losing quite strongly over the last few weeks or so, having held on to long positions, believing that the bull market would continue. However, given a strong sell-off we've had over the last few weeks or so, many people have now been buying into this sell-off, believing that we could possibly be due for a turnaround. As a result of this, they're long many of the indices, the FTSE, the DAX, the S&P and the Dow. They're also long the euro dollar as well as sterling dollar, as well as gold, as well as oil. So pretty much everything that has been coming off the last few weeks, clients have now been buying into on the back of the view that it will possibly bounce from here. In terms of a theme of the week, I think the theme of the week would have to be the fact that politics is now starting to play a bigger and bigger role in the financial markets. It's actually leading to greater and greater uncertainty as to what will actually happen, and you're getting far more volatility than we've had over the last few months or so. In some respects, you could actually say this is actually very good, because at least it means the markets are now moving around, and it gives clients an opportunity to actually try and make some money. At the same time, you can actually see far stronger moves and far bigger moves, so you could possibly see many clients losing a lot more money a lot more quickly than they would have done over the last few months or so. This uncertainty isn't actually expected to change anytime soon, so we're still seeing what actually happens going forward. As it is, markets are still very volatile, still moving on very aggressively. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.